Hello, everyone. We have just gone live. I'm just waiting for all platforms to update. And that is it. So I am joined by a trader called Bruce, one of our in-house traders. Bruce, thank you so much for coming on and doing this live session with us.
Hey, Sam, good to be here.
Awesome. We're just going to wait a few minutes to allow some people, obviously, to join.
Sure, no problem.
Not everyone's going to be bang on time. But in that time, if you would like to, set up your charts, make sure everything looks good on your end. And, I'll keep addressing the viewers in that whilst you do that. To all the viewers, welcome again. This is a live trading session. We'll be trading the US Open on all major instruments. So we're going to be looking for trades on major instruments. We're going to give it a few more minutes just to allow people to enter. I can see the room is starting to fill up, which is good. How are things with you, Bruce? I hope everything is well.
Good. I mean, everything's good. As you know, the U.S. market is dropping again today, and that's impacting a lot of things. But I think that we're probably closer to a bottom now than we have been.
Yeah.
Sam, I'm going to. I didn't have quite enough time to totally get knowledgeable about the platform, so I'm going to integrate it with my trading view charts. And then and then maybe if there's anything that needs to be addressed on the platform, you could point it out or point it out to me. Either way.
Trading view is great. Use whichever charting you prefer. Trading view is absolutely fine. And once it's all ready, just let me know and I'll add that. You can just share your screen. I'll add it to the stage and then it will be visible to all the viewers. So to the viewers, we do apologize.
Whenever you're ready.
We're running a tiny bit late, but you're ready?
Yeah.
Perfect. So if you go ahead and just hit the present key and you can add your screen, the trading view screen should be at the bottom.
Got it.
There we go. I'm going to hit that add to stage right now. Perfect. And we are up and running. That's looking good. Okay, so to the viewers, you've just tuned in. We're doing a live trading session. I'm your host. My name's Sam. And the actual training and analysis is going to be done by Bruce, a veteran trader. So you're about to see some really awesome stuff. We're going to be trading the US Open. And of course, we're doing all major instruments. Okay, so currencies, commodities, potentially. Please take it from there, Bruce. Take it.
All right. Thanks, Sam. Welcome, everybody. So what I thought I would do is I'm going to go to, because I'm a little more familiar with these charts right now. I haven't had as much time to get to know the platform, but I'm going to start going through some of these instruments and break it down high level, or what I'm thinking anyway. It depends on the time. We'll start with high level and we'll go down to the shorter time frame, because I think that, if we look at, okay, so I just sat down to trade. I have some instruments to trade. I have no plan yet. What am I going to do? Is there something to do? And that's what I want to do. I want to explore the environment and see what becomes apparent to me that I might want to know about now in current session or in the future, where I can set an alert, where I can set a preset order. So I'm going to just start with the basics. We'll start with the euro dollar and I'm going to go out to the weekly chart. Okay. Now, the important part of this, from my perspective, is the process. Okay, so my suggestion is pay attention to the process, because the process is going to be similar to. Did you see that alert that came up? I thought I got rid of those. Anything pop up on the screen, Sam? Did you see anything pop up on the screen?
You're all good. No, you're all
Okay.
good. The screen, only your charts are being displayed. Any other window that you have up won't be displayed to the audience. So
Okay.
just your charts. So you're all good.
All right. All right. So now I've got now I've got to switch the screen though, because I've got the wrong window. So hold on one second.
No problem. Take your time. Take your time. And to the viewers, if you do have any questions during this session for Bruce or to myself, feel free to post a comment. We would love to answer any trading related questions you have. We just got a question in from Khan. He goes, what instruments are you suggesting to face less volatility in the coming days? A very good question, Khan. We will come back to you with an answer. We're just going to make sure everything is set up, and then we will come back. There we go. Charts are up.
Okay. So what I was saying is the
Perfect.
important
Take it
thing
from
is the
here.
process. Okay. So since the market is fractal, we're looking at similar patterns at all time frames. And this is an important concept. I'm sure a lot of the viewers understand this, but I think it's important to review it. And because when we have multiple time frames lining up in the same direction, they're telling us similar things. That is a more powerful signal potentially. And so we want to know where we are in the larger environment. So this is a euro dollar. This is a weekly chart. How far back do I go? I go back as far as I need to in order to see what price action did in the past. So if I go all the way back here, we could see this, right? So if I wanted to just start doing some analysis on this, I would start drawing some lines. I have no preconceived idea at this point. This is the important part of it, I think, to understand too, is I don't have anything I want to do with the euro dollar. I have no idea. What I'm doing is looking for what the market is saying. How is it communicating about what it has been doing and what it might do next, therefore? So I'm just drawing some lines for key price levels to get a better idea of the structure of the pattern that has been occurring over the course of a number of years. And then see what it tells us. So just quickly, what is this telling us? Well, we have a series of lower swing highs and lower swing lows. Lower swing low, lower swing low, lower swing low, lower swing high, lower swing high, lower swing high, lower swing high. A series of lower swing highs and lower swing lows is the definition of a downtrend. And of course, it's obvious in this case, but I say it that way for a particular reason, because sometimes it's not so obvious. And when it's not so obvious, it's good to remember what is the pattern that I'm looking for. Now, then we can look at, and just to tell you what I have on here, the purple is the 20 simple moving average, the orange is the 50 simple moving average, and the blue is a 200 simple moving average. And those are trending indicators just to give me some additional trend information, because you see back here, as the trend came down, price broke out above there, and then where did it find resistance? It found resistance at that trend line. And then it came below the 200. So it's been chopping around the 200 until now. So this is a change. This is an important change because it's the typical progression of a bear trend. So I want to know where we are in the larger picture. So if I'm going long, I want to know I'm going long in a larger bear trend. Now, depending on my time frame that I'm trading, it may not matter, or it may matter less. But again, we're going level by level, and this is the weekly chart. So it's good to know that we're in a long-term downtrend, because I don't want to expect euro dollar to come up here in the foreseeable future, because there's nothing telling me that that might happen. Okay. And as I continue to progress through the analysis into the near term, we have this trend line there, we have this trend line there, and that identifies a symmetrical triangle, which is right here, which is a form of consolidation. And then we had a breakdown from that symmetrical triangle. Now, also important to understand that these patterns evolve. So if we look at, that was a symmetrical triangle. And then there was a breakout that failed with a double top. And then it failed, confirmed on the bottom as it dropped through the bottom. So this is a failed breakout. But the important thing to recognize here, as far as failed breakouts, they present some of the best trading opportunities because some of the bigger moves can happen when there's failures. And you see a bit of that here because as we zoom in, and this is a weekly again, we'll go into the daily shortly, you can see an accelerated sell-off here, a little slower decline, accelerated sell-off here when it's breaking through the line, the bottom or the initial bearish signal for the symmetrical triangle, and then it accelerates to the downside. So these are important components that tell us maybe the downtrend is continuing. Also, you can see here that when we broke this double top, one top, two top, one high, two high, here's the neckline in between here. We broke through it there and then broke through potential support of the 20 moving average, broke through potential support of the 50 moving average. And then what happened? It reversed back up and tested prior support as resistance. This is an important concept to understand because you see this all the time. And what happened after that? So there was a back test of resistance at the 20. The 20 previously represented support. And once that happens, the downtrend is ready to keep going. And we'll see some other examples of what I'm talking about in that, I think, as well. So now we continue the downtrend and we've been consolidating for a little bit. Let me just put my lines, a couple lines in here just to give me some guidance. Again, I'm going step by step to see what the market might be telling us, if anything. Okay. So one thing I want to pay attention here is this purple 20 moving average. This is on the weekly chart. Okay. But the market is at it right now. Will that matter? We don't know. It could. So if I see bearish behavior, it's going to make some sense because we're testing resistance at the 20 moving average, which happens to align with these previous highs right here. Okay. And as we go deeper, it'll start making more sense, hopefully. But one thing that we did do is we undercut this swing low right here, which is the bottom of the symmetrical triangle, and then double bottom. And now we're attempting to break out of that double bottom, and trading has occurred above that prior swing low. So that's a sign of short-term strength. Okay. So, and we know that when we have a relatively good swing, there's frequently going to be a counter trend move. A counter trend move so far has barely occurred, but we have this potential double bottom. Maybe we'll look at it more closely. And you can see that on the weekly, on the relative strength index, which is a measure of momentum, bearish momentum has converted into bullish momentum. So it's in alignment with what is happening with price. Now we go into deeper, we go to the daily chart with the bigger picture in mind. And of course, the bigger picture, we're going to have that in mind. We don't need to look at it necessarily every day because we do our analysis on the larger time frame. It doesn't change as frequently. But right here we have this double bottom. I'm going to call it a double bottom. What we call it is really not important. The important thing is that we have consolidation that is indicating a potential change in trend. Now, why do I want to know about the change in trend? Because if I know about the change in trend, then I can, sorry, I got to get some of these old alerts. If I can recognize a change in trend, then I can get in earlier in the trend and I have the potential for a bigger move. Or if I'm, depending on my time frame I'm trading, I could get in, take profits, get out on the pullback, get in, take profits, get out on the pullback. But I want to know where it might go to where when I'm going to start paying more attention to a possible reversal. Okay, so we have our potential double top, double bottom pattern. And I apologize for some of you that, maybe I'm going slow for some of you, but look at, the honest truth is that the basics remain the most important components of analysis. I've been doing this over 25 years now, and it always comes down to the basics. From my perspective, you guys may not look at some of the stuff I'm going to do as basics, but, once you've been doing it for a while. So, okay, so now we have our daily trend, and I want to see if there's any other, and I'm just doing this for my own visual purposes, okay? Otherwise, it doesn't mean anything. I don't need to draw that line, but you get to see the trend better, and then I get to see the trend better. And then therefore, it's less likely that I make a mistake or I jump to some conclusion. Because again, we're in a process of discovery. We're not trying to take an opinion and put it on the market. And the process I'm going through is one way to help do that, because we're prone to put an opinion on the market. That's what our nature is, to do that. Okay. So a couple things. What does this trend line tell us? Well, you can see there's a breakout through the trend line. And interestingly enough, the 50 orange moving average, which converged with the trend line right here, was at the trend line right when the breakout occurred. So now we have two indicators identifying the same level of resistance. Therefore, we have the potential for a more significant breakout. We got a one-day breakout, one-day follow through, and then it pulled back, and then we created that double top. So it's been chopping around this line. But one thing changed recently, which is the 20 moving average crossed above the 50 moving average. And if we go back, you can see it was way back here at the beginning of the downtrend when they crossed the other direction. Now maybe we've discovered something. This is indicating that strength is coming into the market. Now, we need to have follow through. So, as I talk about the different pieces of evidence, the technical evidence that is hopefully going to lead us to some clarity, I'm saying it just like if you watch on a police show on TV and they have that whiteboard and they said, we got this, we got this, we got this, we got this, and all the evidence on here, this other guy's got no evidence. Well, he's probably not the guy, right? The bull may not be the way, maybe the bear's the way, and so forth. So that's why I'm saying it in the way I am saying it. Okay, so we have this bullish crossover, and it just occurred. And so now let's go a little bit more in detail. And one thing I want to bring to my attention, though, is we have this breakout level here on the double bottom at 1.0533. 1.0533. So I'm going to go up here and put in an alert. So that when that happens, I'm alerted to it, because I may want to get more aggressive in a position that I already have, or I may want to enter a position, or I may want to watch it, and so forth. Now, as most of you, many of you may be aware, if you're trading in Forex, an initial breakout many times fails, and you have a pullback. So the safer entry is after the initial breakout in any situation, and then a reversal back, and then another reversal in the direction of the pattern. Okay. Now, what is important here is the bigger picture, because we have the potential for a continuation of this developing bull reversal, because the breakout of the double bottom is a bullish reversal of this downtrend. Okay, but it's not the only thing going on, right? We also have a bullish reversal supported by the crossover of the moving average and the movement away from the downtrend line. So you can see the behavior was around the downtrend line. Now it's away from it. And when it moved away from it, it also gave a bullish signal of breaking out above the 20 and 50 moving average. And look at how it did that. It did it in a sharp, clear, decisive breakout. Okay, this is important because this is what we're looking for as traders, right? And then here we have the same thing. So on this breakout, we had buyers jumping in. On this breakout, we had buyers jumping in. And then what happened? Pull back, test support, previous resistance becomes support. Once it becomes support, the trend is ready to continue, or it starts to weaken and fail. So if that pullback low then converts into a bullish reversal, then we have this bullish reversal of this trend here of higher swing low, high, higher swing high, higher swing high, higher swing low, higher swing low. In other words, this swing low is above this swing low is above that. So this is the uptrend component of that double bottom. And this is important because maybe we're not trading the double bottom. Maybe we don't care about it. And our time frame may be less, so where it doesn't have as big of an impact. So this is another example of what I was mentioning about the back test of the moving average. Perfect, a great example, actually. And so once that happens, then the trend is ready to continue, but you also have a clear stop because that low, if it goes below there, that's bearish, short term anyway. Okay. So now let's go deeper into the 4-hour chart, having all that in mind, because I mean, typically I'm going to assume most people are probably trading the 1-hour or 4-hour chart. That may be an incorrect assumption, but I'm going to assume that for now. And as we go into the shorter time frame and start to break down the pattern there and see if anything else becomes apparent. Because now I'm going to take this double bottom pattern into consideration along with this uptrend. Okay, and this uptrend now is in its, let's see, it's in its, let's just put some waves in there, a wave count in there. 1, 2, 3, 4, 5. I'm not saying that's a top. I'm just saying this is a guide for us. Okay. Why is it important? Because typically we will frequently have 1, 2, 3, 4, 5 waves up or 5 upswings before the trend reconfigures itself in some way. So in other words, we're getting further into this uptrend now because we're in the third swing up. And something important about threes is we commonly and frequently will see a series of 3 sharp days up, a series of 3 swings before a reversal, and so forth. So the number 3, especially as far as swings, once you're in the third, you're at a higher probability of the characteristics of this pattern starting to change, possibly. Okay. And you see on the breakout to new highs, it lost momentum immediately. Not a big surprise because we have resistance of this high over here. But so we have these two forces. We have the bull force here, and we have the continuation of the bearish force within this larger pattern. And now they're fighting each other. At some point, one is going to win over. And what is being indicated so far is it looks like the bull trade, the long trade, is going to be probably have more things in our favor. Okay, so that is a conclusion I have arrived to, right? So if I'm looking at this, and this again is going to depend on your time frame. So if you're trading the ups and downs on these wiggles, fine, then you're going to look at it with a slightly different perspective, but all the analysis still comes into play. What you're going to do with it may be slightly different. Okay, so one of the things I'm noticing right away here is that so there was a breakout of, well, let me go back for a second. So the orange 50 chopping around, moves away from the 50, breaks out through the 50 here, back test, and then takes off, pulls back to test support at the 50. Okay, so this is the process of pulling back to test support, which was previous resistance in this shorter time frame. Okay, and then it did it again. Is this bullish behavior or bearish behavior? Well, this is bullish behavior. Okay, support is being found where you would expect it to be found during counter trend moves, counter trend to this uptrend. Okay, so now let's go into the hourly and see if we see anything additional. And one thing that I noticed right away is that on the hourly, we have the 200-hour support here and 200 support here. So on the different time frames, we're getting moving average support just on a different moving average. Okay, so that's verifying support. Okay, now what happens next has not been determined yet. Okay, we're still just getting a lay of the land because some of the components we're talking about are going to come into play in other analysis, and I'll likely go through that faster at that time as well. Okay, so now what I'm looking for, is there anything else that I recognize, any other patterns in particular? So I want to identify near-term support. Okay, I'm going to draw a trend line there, and I have my moving average, And so one of the things I'm going to want to know is, when is it getting weaker? Well, certainly if it goes below this interim swing low here, it's getting weaker because it's back below the 200 moving average and it's breaking below a previous low. Okay, so that low at 1.0456. Okay, that's for the bigger picture. Okay? Now, as we go in a little bit closer, you can see we have some short-term resistance here, and I'm going to now throw a Fibonacci retracement level on here to see if it lines up with anything, and you can see it does line up with the 88.6, which is a less common level that is hit. It's more of it is an extreme level, the extreme level. But you could see that the market certainly seemed to recognize that level, given how it reversed once it was hit. And importantly, after that, what happened? It created a bearish candlestick pattern of a shooting star. Now, let's go into the 2-hour chart just to see how it looks, any different. So we have this consolidation, a symmetrical triangle again, a breakout, and look at the breakout. Okay, the breakout was decisive, it was clear, the close was near the high of the period, and the breakout was the 20 period moving average and the trend line. Again, we have two moving averages lining up. That's telling us this is a more significant level. And what's wild sometimes is how, I mean, I've seen this a lot. I haven't tested it yet. Is that they'll line up uh, when the breakout's ready, and they don't necessarily line up before that. So that's an important thing to keep in mind, and that's kind of interesting as well that happens. So we also have the 20 moving average crossed above. Well, I'm sorry. Let me go back to the 1 hour because I'm on the 2 hour now. Let me go back to the 1 hour. Okay, so we have the moving averages are not confirming clearly yet. They're not clear, but the 20 is about to cross over the 50. So on the bigger time frame, everything is looking bullish. Okay, but in the short term, we're further into the day. Some of the early momentum has already taken place. Um, the question is, what kind of follow through are we going to have at this point? Okay, so I'm going to then go into the near term uptrend and put in a. And by the way, Sam, if there's anything that it comes to mind that you want me to repeat or get into deeper, just let me know. Okay.
No. You're doing very, very well. There are a few comments coming in. I mean, if you feel to address them now, we can. But I feel you're getting very into the swing of it, and I don't want to disturb your rhythm. So entirely up to you.
Okay, good. So here we have the, let me just put another level over here. Okay. So here we have resistance. Now, you see the closes are more up against this resistance. It's only the spike they got above it. Okay. So this is the market telling us, hey, we recognize this resistance. All right. So I want to pay attention to that level. I may want to pay attention to that level. Okay. And what was the retracement? The retracement was the minimum anticipated in Fibonacci analysis of there is a lower one, but generally speaking, 38.2% retracement is a minimum common retracement. However, given this, and given the completion of the 88.6% retracement, and given this potential resistance, I would not be comfortable looking for a long at this point because it looks like this swing needs to pull back more. Whether it does or not is not really the thing. That's what it looks like to me. So I have to continue to look at it from that way. That means that, so if I'm looking to buy then, and I would be looking to buy on weakness and some sign of solid support or a bullish reversal, the Fibonacci level is giving me some potential level where that I might want to relook at it. And I'm just going to throw in a couple more lines. This swing low right there was clearly support at this high, but I'll use that line to equal that. And I think that's good for now. So So what's important about this is that all the stuff we looked at in the bigger picture. Because if you looked at, when you look at the bigger swings in Forex, they're pretty good. If we just take like from here to here, for example, that's a decent move and so forth, right? So in other words, it'd be nice to be in for some of the bigger moves. Most of the trades are probably going to be the smaller profits, smaller losses, but you also want to have the potential to get some of the bigger moves. If this is a pretty large double bottom pattern. So in the whole scope of things, if we go back, I'm going to take this into consideration, but it's very volatile. It's not a tight consolidation. So I'm going to give more weight to what's going on over here once the breakout happens, if a breakout happens. Okay. Now going back to the 1 hour, now we have a pullback to previous resistance, becomes support, previous support is still potential support. We have a 50% retracement. It looks like the better area or the more reliable price zone to look for entry, maybe down here. Right, okay, so let me just highlight that for you down here. Why? Because we have multiple levels lining up together. We have the two moving averages. We have the 61.8% retracement at 1.04, 1.0480, and we have this interim swing high right here. Okay. What we don't know is if it's going to go down that far. Now, given how Forex moves around, certainly it wouldn't be a surprise if it did. So that would be my higher probability zone that I would want to be looking for long positions. Okay. And watching much more carefully. So 1.0483. 0485. I'm going to put it 85 above that level because I want to be alerted ahead of time and relook at it, maybe reset my stops at that point. Always also keeping in mind that these moving averages are going to be rising more than likely. Okay, so the price represented is going to be higher, and that could put these higher levels. It can make these higher levels stronger interest zone. Let's, if we could say it that way. Okay, so the first one, 1.0490, let's say. Okay, so those are my two zones. And until that happens, okay, one more I guess we could do is that on the upside, I don't want to be surprised. I don't know if it's going down here. It may not do that. So what am I going to look at on the upside? If it starts moving to the top, I need a price level. So this level right here that we identified is good for now. So I'll use this this high here, 1.0505. Okay, so just to review, we looked at the bigger picture. We got an idea of what the larger trend was, or the stronger energy, we could say. And then we started going into our time frames, and it turns out that the short time frame, now we have it aligned with the uh, some of the larger time frame, the larger time frame being the daily in this case. Okay. So that is the euro dollar. So, and also interesting, you see on the 2 hour, we have a bearish candle last period as well. Also on the 3 hour, we have a bearish candle. Also on the 4 hour, less so on the 4 hour, I would say. So let's go to the, excuse me, let's just go to the, I want to just look at one other scenario here on a shorter time frame. We'll look at the 30-minute. So because, some of you may want to short this, okay? So if you wanted to short this, then you'd be looking for a bounce up into this range somewhere and a setup for a short, okay? And right now, if I'm going into the 15-minute, I don't know. It's tough to say at this point. I think, I'd be watching it at this point. But if it did get up here and there's some type of reversal pattern to key off of, then it would be a potential support, a short down to possible short down. I'm sorry, down to possible support down here. Okay, that would be another way to look at it, and as well as, if you're going to trade these bounces and stuff too, it's just you don't have as many things in your favor in that case. Okay, so if we're trading this volatility, you can certainly do that. It's just you don't have support from a larger time frame, I guess is the best way to say it. Okay, so that's the euro dollar. Now let's go to the pound dollar. And one of the things I'm going to be looking for in the pound dollar as well is there anything that is clearly different? So on a relatively, is there anything different? So let me go to the pound again. Okay, so now we have the pound. And you can see right away, it looks pretty obvious that the bounce in the pound was way more significant than the bounce on the euro, right? And relative to this consolidation price structure, the euro is down here and the pound is up here. So that by itself, in the bigger picture, the pound is stronger from a technical perspective based on looking at it from that perspective, okay? So let me just start putting in some of my levels in here, and I'm not going to spend as much time this time on this. And, one of the reasons I'm doing this as well is I want to see how price aligns with the price levels. And so I can see whether I can rely on the patterns that I'm identifying or how much I might want to rely on the patterns. Okay, so one thing important here, we have the trend created with the first one touch, first touch, and then the confirmed on the second touch, extend the line. The line is confirmed here. That's a more solid line once it's confirmed with the third touch, and therefore potentially more significant support. Then we have a test right here, a bounce, test resistance at the 50, same concept again, break down through the 20, break down through the 50. It couldn't even get up to the 20. It didn't have enough buying pressure, enough demand to get up to the 20. Instead, it found resistance at previous resistance, potential support, and now resistance again at the combination, again, a combination of the 200 and the 50. And a breakdown from that was a signal that this trend may be continuing, and a breakdown of this consolidation pattern may be in play. Okay. Now, what else happened here that may be interesting is I'm just going to throw in some lines again. So these levels are giving me my larger support resistance levels. Okay. That may not come into play soon, but at some point they will. So now we have something interesting, staying with the theme of support becomes resistance. You can see how the 20 has not been tested until now. And when did it happen? Interestingly, it happened when the uptrend line converged with the 20 moving average. Aha, interesting. And we have solid potential resistance here with the convergence of the 50 and the 200. That's the market telling us, hey, this is an important level. Okay. So important resistance as it stands right now is going to be that 1.2727. So we put in an alert there. Sorry. Around that area. Lower, a little lower. Okay, because I particularly want to know when the more significant price levels are being approached. Okay. Now, then we have, as you see, the first rally, it was resistance. The second advance, it broke through, but it closed at the line, both lines. this time, and we have a series of higher daily lows, higher weekly lows and higher weekly highs, definition of an uptrend. And what happened? Broke through resistance of the 20, back tested it as support today. Now, I'm saying it this way as well because if you're a shorter term trader, you can use this to look for a buy on a shorter time frame. Okay, and then we broke through the trend line. So now we've confirmed, it looks like anyway, the breakout of the trend line and the 20 moving average. And that shows that the buyers remain in charge and that the potential to go higher remains. Okay. And I want to know what my key levels are. Well, we'll go into, I'll do that in the shorter time frame, but so we have that on the weekly chart. Okay. So this is important because if you see alignment with resistance up here on the shorter time frame chart, and you know it's also resistance on the weekly chart, you have a much more solid potential short. And that also means it might have the possibility of going further as well in the direction that we're looking at. Okay, so to continue on this, since it's breaking this line, we have to assume it's going to test resistance at the 200-week moving average. Okay, at a minimum, until we see evidence to the contrary. Now, we're going to the daily and look at it closer up because one thing that I noticed right away that the 200-day moving average is up here as well. Now, just to go back to the weekly, let's check the weekly. The weekly is at 27.30, say 27.28, let's say. Yeah, so it's a bit higher. Here's a weekly right here, this dotted line. So that gives a little bit of a higher potential target. But since the weekly is there as well, I'm going to be paying extra attention for possible resistance in this zone. And let me say one thing about the price levels. The price levels should all be looked at as an area of price, an area of support, an area of resistance, an area for the breakout. Okay, because you got to give it a little flexibility in most cases. Okay, so now we have that. Now we're in the daily chart, and I'm going to break this down because despite what it looks like on the weekly, it doesn't tell us anything about what's going to happen. It just tells us where there may be support, where there may be resistance. So we also have to anticipate the possibility that the uptrend continues because I don't know what's going to happen. Okay, so I'm going to put some Fibonacci retracement levels on there, and I'll go through that in a second. So I'm doing the measurement on two swings. I'm doing the measurement of Fibonacci retracement on this full decline. That full decline is going to give me the more significant potential Fibonacci levels because it is a pattern over a larger time frame. The bigger the pattern, the more significant the price levels, theoretically. We don't know if that's going to be reality, but in theory, that's the case. And so we're going to look at it that way. And so I'm going to give less weight to the analysis around those levels. And what I'm really looking for is I'm looking for confirmation with other price levels. So ideally, I've got confluence of price levels that are telling me similar price levels. And I'm just looking through here to see if anything stands out. And nothing really stands out. So I'm going to, for horizontal levels. So I'm going to go into the weekly and just look at it from that perspective to better identify the swings. So I got that swing low right there. And Voila, we're at resistance of that. I'm not looking here to find this, by the way, and this is important. I'm looking here, and it falls wherever it falls, okay? And I'm not trying, I don't want to be biased in how I'm analyzing this. So I look over here. Let's see, maybe this guy right here. But other than that, there's a bunch of them. So there's nothing that really stands out to me. So, but what is important is going to be this swing high right here. So I'm going to move this guy down to there because this swing high right here is what? It is part of the downtrend price structure of lower swing highs and lower swing lows. So it's a key trend pattern. And once there is a rise above that, that further confirms the bullish trend and the bullish reversal of this downtrend. Okay, and it's another barrier to indicate that, hey, maybe this thing could keep going. Okay, and it's one of the more significant price levels because it's part of the price structure, the price pattern. So we're in an interesting area right here because a breakout and a sustained breakout, I should say, above these moving averages could see a rally into some of these higher price levels over here. But anyway, that's the bigger picture. So let's go into the shorter time frame. Okay, so it's trying to break out above this trend line. It seems to be recognized as the trend line. It is confirmed to break out above the 38.2% retracement by back testing it both yesterday and today and bouncing right off at almost exact hits. Okay, and yesterday was a bearish candle, interestingly, but never, and it triggered, but it's failed so far. The bearish trigger failed. That's also a bullish indication. If a bearish trigger fails, that's a sign of strength. Okay, so let's see if there's anything else on this one. So I'm again going to, I'm looking at the patterns. I'm trying to identify the pattern to see if it is telling me anything about what might happen. So I'm going to create a parallel trend channel here. And the reason for that is because you find that in trends, there's many times symmetry between the moves, some degree of symmetry or structure or organization, you could say. So symmetry would be we could put a middle line and we have roughly, theoretically anyway, equal price action above and below. Okay, and many times, if you hit the top channel line, you come down and test the bottom channel line. If you find support at the bottom, you go and test the top. Maybe this happens, maybe it doesn't happen, but we want to be aware of it. Now, some of you might say, okay, why don't I put it here? Well, you could. You could put it there. The thing is, I want to look at the previous price action more than the current price action because the current price action is not done. And so I'm not sure that that's going to be the highs, right? We could have the highs up here or it could change, right? So at this high, we also have confirmation here. So I still have 1, 2 days, 3 days hitting the line. And I'm aware that maybe the line should be lower. Okay, so in my mind, I'm recognizing that line could be lower. Okay, let me take rid of this guy. And again, we're just going through the process of discovery to see if anything comes apparent. Now, some of you may be saying, hey, let's trade, let's trade, let's trade. Hey, why don't you figure out what you're going to do first? Then you worry about your trading. So this is all designed to arrive at, well, I should say this, when you're looking at trades, you have the ideal situation, right? You have the ideal situation. And everything else is a variation on that ideal. And most of them are less. So when I'm looking at any try to trade setup, potential trade, there's a number of components that go into it. I have in mind that, okay, this is really ideally what I'm looking for. And where does this new trade fit in? Does it fit in here or does it fit in here? If it fits in here, it's higher, very higher risk. If it fit in here, it's less risk. This is the way I'm thinking about it. Okay. Now we have the crossover, bullish crossover here. We have the break of the trend line, similar to what we saw in the euro dollar. So this behavior right here has some similarities to it, right? I have my alerts going off now on the euro dollar, 1.0505. Let me just go back there for a second and just take a look at that. Okay, so it bounced up to this resistance level, and as I said, I wouldn't be surprised to see it bounce further within the range of this candle. But whether this could lead to a breakout of that, I think some more time has to go by. And maybe I'm wrong, but I'm willing to be wrong. Okay, so this for you shorter term traders, then you want to look, keep an eye on this rally and see where it might go and see if there's any type of bearish signal comes out of that. All right, going back to the pound dollar. Okay, now, okay, so now I'm just seeing, is there anything else I want to look at here? So I'm going to get rid of this just to unclutter things a little bit. It's 38% retracement. A trend line is useful as a guide, but I'm not going to use it as a signal per se. I want to have other confirmation. It's not reliable as a signal. For one thing, you could draw it slightly different. Somebody else may be touching this low right here, and so forth. So the trend line is not always a perfect in the perfect location, so it's used as a guide. It is interesting that we're finding resistance at the 61.8% Fibonacci retracement, the golden ratio, which is a key level. Combined with this resistance here, support becomes resistance, support becomes resistance. And you can see how it accelerated here. Maybe this is a test of the top line. If I move this down, it is, right? If I move this down here, touching this high, it is a test of the top line, which increases the odds it's going to come back down. Now, maybe it gets to the bottom line, maybe it doesn't. That's not really the key thing. The main thing is it's heading, if it starts heading in that direction. Okay. So that's another way to look at this. You could look at this as a possible short to test these support levels. So with that in mind, let's just go to the 4-hour now. I don't see a particular setup that I like, but we could personally, but that doesn't mean you guys may not like it. So we could draw a line right there, right? It is interesting that this swing low, this interim swing low, found support right at the 50 moving average, which is bullish on this time frame, which is a 4-hour time frame. But certainly things are going to change more than likely if price drops through this swing low, right? Because it's a breakdown, and it's a 4-hour chart. It's a breakdown of this top of this trend line. It's a breakdown below this minor swing low. It's a breakdown below the 50 moving average. So that's a whole bunch of stuff, right? And we have a rising, no, I don't want to say, I'm not sure what that pattern is. Let's just look at it. A rising channel, a rising wedge. Let's look at it as a rising channel for now. Okay. And this can turn into a bearish pattern. Okay. Right now, I would say it's still early, but I would want to be watching it because we had strong momentum here, and this is consolidating, but it's going higher while it's consolidating. It could take off again, or it could lead to less enthusiasm and interest and a pullback first. And certainly a breakout on the larger time frame would be more reliable if there was a pullback first, because it builds up some energy. It's preparing to bust through that door. Okay, it needs to make a run for it in a sense. So I would want to have then a signal above that 50 moving average of 1.2614, let's say. And bring my attention to that. For a possible move down to some of these lower levels, where? Well, let's just take the Fibonacci. I'm going to take this swing low right here and touch and swing it up to the top line here and throw in my levels. I'm not as concerned about the 38.2 because I'm looking for a bigger drop. So I'm gonna look at the lower levels more so. And then I can also use this swing low right here, excuse me, as well. And let's see if that tells us anything. Well, it does tell us a little bit, doesn't it? Because what am I really asking? I'm saying, is there confluence? Is there confirmation of any of these levels? By themselves, they're not reliable enough. Good for a guide, but I think you got to be careful trading off them. You need confirmation of the levels. Okay, so here we have, and I'm just looking at some methodologies. Okay, there's other things to do, but I don't want to do too much. It'll get too confusing. So the 38% aligns with this swing high. Oh, well, that's interesting and important, right? Because that swing high is significant, and the 38.2% is a minimum drop that I would anticipate. So the first potential support level is down there. Okay, and then we have the 50% level here at 1.2511, and then again we have the combination, which is really what we want to see, of the sorry, I'm looking for my arrow, combination of the 50% retracement and the 61.8% retracement. So that shows an alignment between the two swings. This is where there is an alignment. So that presents a potentially higher probability support level. Okay. And as it comes down, we're also going to pay attention to this 200 moving average, which happens to align with the trend line. Aha, again, this aligned with the trend line again. Now, it doesn't always do that. Okay. All right. So that's a potential short. And then on the long side, I think that, well, first of all, if we get above today's high, that's going to tell us things are getting stronger, right? So we'll take today's high as an alert, 1.2677. I don't need it ahead of time because I wouldn't be looking to buy that initial breakout. It's something I'd want to watch for a pullback on a shorter time frame. Okay. And the more I look at this rising channel, the more I'm thinking, hey, maybe it does come down first. And then we have to, well, you could see here, we have some alignment with this 50%. The 20 moving average right now, anyway, is aligned with it. Going into the 4-hour chart again, 1-hour chart. All right. Okay. Now, of course, everything where more weight is given is going to be dependent to a large degree on what time frame we're using as your primary trading time frame, as your primary signals. All right. So we got those guys. Now let's go to how about the S&P and the NASDAQ real quick, because we got a lot going on with them. And there might be something interesting there too. So let's just take a look at that. We'll go to the weekly real quick. I'm not going to set up as much on this because we covered a lot of the components I wanted to make sure I covered. We're just throwing some lines, just kind of see where they go to. I'm not going to do the full analysis. I'm going to do analysis that now we're looking for a possible trade. That's the analysis we're going to do. Not that we weren't before, but I think that we may be closer to something happening on this. For one thing, Forex now is moving into the doldrums as it gets closer to the end of the day and so forth. And the U.S. market is not closed yet. So we still have a bit of time there. So on the weekly chart, we have this bearish type rising wedge pattern with the breakdown triggered below this week's low. It's already attempting to break down. And notice again, the 20 moving average aligns with the trend line, 20-week moving average. That tells me I want to pay extra attention to this versus what I may have, how much attention I may have paid before. Okay. Because if we go, okay, and then But what happened before? Well, you see support. So we had a reclaim of the 20-week back here, and it took off. Tested support, 1, 2, 3 weeks, took off. Tested support, broke down, found support quickly, and rallied. Tested support, broke down, reversed quickly. So we could see a similar situation where it drops through it shortly and then quickly gets back above it. So that's always a possibility. Let's go to the monthly chart real quick, see if there's anything more apparent there. Because this analysis here is going to come into play for quite some time, a little while. So we have, what's today, 26th, 25th? The month is almost over. And guess what? The S&P is about to close in a bearish position on a candlestick pattern. Doesn't mean anything unless there's follow through, but it's not a bullish closing. Okay, and what happened on this? We had a higher monthly high, 61.47, previous month 61.28, previous month 6,099, 6,044. So we have a series of higher monthly highs. We have a higher monthly high here, not here, of course, and we have one here as well. So we have the continuation of the bullish momentum indicated on the higher monthly high and still on the higher monthly lows. Okay, but that will change on a break below this month's low. We don't know where the low will be yet, so we'll wait for that to happen. So that's on the bigger picture. So it's at risk, and you can see on the relative strength index, not that this is good for timing, but certainly it would be confirming if it started to turn down. Okay, so maybe confirming bullish bearish behavior. Now, that's on the larger time frame. We'll go to the weekly now, and then the daily, and then we'll stay with the daily for a minute. And so I'm going to do some analysis on the daily and see if I can identify anything that might be useful. So we know right away we found support so far at the 61.8% retracement, which confirms this interim swing low right here, roughly. And so far it's holding that level, but it's below the trend line. The moving averages on the daily, we broke through it way up here, no test of resistance. Broke through it here, no test of resistance. Is that bullish or bearish? Well, certainly it would be more bearish than bullish behavior, right? And why is this important? Because usually when things happen in the market, you have a big move in one direction and then things die down. You have a counter trend move, you have consolidation, then it moves again in the same direction. So if you see clear, sharp selling, that selling could happen again. So this selling here happened again here, you could say. And I'm just giving kind of a rough visual on that, okay, given the wide range bar and so forth. And the lack of hesitation as it broke through potential support. Although the moving averages inside this consolidation are not as significant because they're trending indicators. Nevertheless, they can give us some guidance, and they are right now, I believe. Okay, so let's see. So now we have the question is there short still? Is it still shortable all along? So let's go into the hourly and look at it a little more carefully. So here's one thing that interesting happened. We had a bearish candlestick pattern last hour, right here. Bearish, why? Because the buyers were in charge earlier in the session, and they could not retain strength. By the end of the session, the sellers were in charge. And this is a bearish candlestick pattern. It triggered on a drop below that low and then immediately failed. So we have a failed breakdown. That's good to know because failed patterns many times lead to sharp moves in the opposite direction. The pattern, the trend is obviously down, right? Near term on the hourly. So no, this is not a secret to anybody. So who is waiting to sell? Who is waiting to short? I think it's fair to say a lot of people have already made their move. So there's less people waiting for that. And therefore, in my opinion, so far anyway, the better move is probably going to be to the upside so far. And if we go back to our wave count, you could see that we have, and again, this is not the Elliott, I'm not doing specific Elliott wave right now, just in general, okay? See something up here. Again, why is this important? It's important because I want to know, are we near the bottom of this trend potentially? And what is the possibilities of that? And it's not just about what's happening now, it's what's about what might happen later as well. Later today, tomorrow, and so forth. Because if we get a reversal and a bounce, it could go on for more than one day. Okay, so we have 1, 2, 3, 4, 5. All right, well, just that on its own, we've got 1 down, 2 down, 3 down. That by itself tells us there's a better chance maybe for a bounce and a continuation of the bearish move. It doesn't tell us what's going to happen. It tells us what might happen. Very important. Okay. Now, so we got that. And do we have a pattern here? Well, we have a outside candle, right? We have an outside potential reversal candle. All right, that's good to know. And then we go into the shorter time frame, 30 minutes, get to see it a little more clearly. And then the 5-minute. And then the 10-minute. Now, everybody has different ways to enter and get confirmation and all that. So you can use what we're talking about and implement it based on what your criteria are. You know, excuse me one second. All right, so now we're on a 10-minute chart, we'll go to a 15-minute chart. Now, somebody might be asking, okay, why do you use this? Why do you use that? I'm just looking for the information I'm looking for, that's all. So that's why I'm looking at different time frames. And I don't have, we'll leave it at that. Okay, so now we dissect the 15-minute chart. You can see that we have a reversal candle on the bottom. Interesting. We have a bullish hammer candlestick pattern. And what happened after it was broken out? We have a sharp rally. And we have a sharp rally above the previous swing high. Okay, and if you look down, if we look at this price structure, we have a decline, swing high, decline, we could say this is swing high, decline, a swing high. That's part of the price structure. So we have a bullish reversal signal. We have a bullish reversal signal here. We're on potentially key support zone, right? Okay, so now things are becoming a little more interesting. We have the trend identified there. And you can see that, let's bring this down here. Okay, so this is why I draw the channel sometimes. Not all the time, but you can see something interesting here. You see that we have this hit, a second hit, third hit, support, we get a reversal of that level. So now things are starting to come together a little bit, step by step, right? All right, so I would take that information and then, watch this for a setup that meets your criteria. I don't see one that I would say, okay, buy here for sure yet. You got to kind of keep an eye on it because we could still come back down here. But if we come back down here, that would be great because taking the fact that we determined in our assessment, which could be wrong, that this is probably better for a long right now, we'd be looking for a long, if anything. Now it's a question of how. Okay, and everybody's got different ways to do things. If there was something obvious here, I would say it, but I don't know. If you buy this breakout, which you did here, you're going to do for a pullback, right? Maybe you miss it. I don't know. You have to see. I'm sorry, I got stuff popping up on my screen. All right, so now it's further into the day already, right? So we're in the lunch hour now, and this would be the time to chop around and pull back and so forth. So I'm going to go to the 5-minute chart, taking everything that we've seen into consideration. And one thing that strikes me right away is you can see the 20-period moving average is crossing up. I mean, it's turned up. Okay. Um, and that's bullish on the lower time frame. And then where might it go to? Or where would we want to be anticipating potential resistance? So we have this previous support become potential resistance. The 38% retracement. I took out the 50. Let me put that back. Okay. So again, how you read some of these indicators is also going to depend on your time frame and how you're doing your trading. So, for example, I could say right here, I'm going to buy it right now on a breakout above the yesterday's period, and I'm going to have a stop right here below this low in anticipation of this bigger move, which is way bigger. So I'm risking very little for a nice potential move because maybe I don't get a pullback, maybe I don't get an opportunity. So that also has to be considered. Okay. Now, I think that's going to be it for this, the SPX, unless there's anything that comes to mind, Sam.
No, that was really
anything
good.
else? What's that?
Not. But we do have some comments that people have posted who would like to ask, well, basically your advice. And so if you want, we can go through some comments if you feel that's okay.
Sure, that's fine.
Awesome. Right, so right at the beginning of the session, I don't know, can you actually view the comments yourself, or do you want me to actually speak them out loud?
Say that again?
Can you view the comments yourself? Can you see them on your screen, or do you want me to say them out loud?
I see. Let me see. Okay, here we go. Yeah, okay. Let me see. Okay, you see any breakouts or reversals on the S&P chart? Okay, I think I addressed that, right? Okay, what do you think caused the bearish move? Okay, I have no idea. It's not something I try to spend too much time on. For one thing, I don't have the time to try to figure it out all the time. For another thing, it doesn't matter as much to me because they're usually, unless it's a more specific information. Okay, it may need to. Let me phrase it. Let me say this a different way. Okay, I'm a technical momentum trader, so I primarily rely on that. I want to know what's going on in the bigger picture and so forth, and some key economic news and macro events and things of that nature, and key upcoming events and so forth, because volatility may spike. But what the results of those are, I don't care about so much. I just care about how the market's going to react. So I'm not trying to look and see why things are happening. And the reason is because it will drive me crazy. And maybe some of you have shared that, right? Because you're never going to get it right enough, in my opinion. You want to know it for the background. You want to know what kind of environment you're trading in, things of that nature. And I may have an assumption about what caused the bearish move, and it could be wrong. How do I know? It's the same thing as like, you have Wall Street, all the big banks are projecting prices at the end of the year. How do you think they do this? Is this a scientific mathematical method? No. They're speculating, pure and simple, based on information that is impossible to forecast with. And that's why they're almost always wrong to some degree, right? And they play it safe because you can't forecast that way. with any degree of accuracy. You need to have geometry, you need to have numbers, you need to have math of some sort, cycles and so forth. Okay. So anyway, excuse me. And a lot of times the real reason for the move is not known until later as well. That's very important. If you go to mainstream media to look at why things are happening, you will for sure be behind the curve. Because that information you should have known before, not now. Because now everybody knows it. And so when everybody knows it, there's nothing to, it's less likely to happen the way it might. Okay. So let's see.
Yeah. Yeah, very well said.
Okay, approach to risk management when trading high impact news events. It depends on, well, in general, stay out. Wait for the volatility to occur, and then wait for the real pattern to be determined. Because if you know, particularly if you had Federal Reserve announcements, you'll have a sharp swing that's totally convincing in one direction, and then you have a sharp swing that's totally convincing in the other direction, and that may happen 2 or 3 times, or it may just happen once, and then the instrument is going to proceed in the direction that it was going to proceed in. So that's how I would look at it. Now, if you've been trading long enough to determine whether you should trade in those environments, then there would be no question. And so you'll know when that happens, there's no question. But personally, I don't trade it. Okay. He says, well, why don't you trade it? You can make all this money and blah, blah, blah. Yeah, but you could lose all this money too. Well, I should say this. I shouldn't say I don't trade it. I will trade it, but I'll trade it much lower size. Realizing that I'm in a highly speculative environment. And so therefore, I'm usually scalping. I'm looking for the sharp swing, take profits, and so forth. How do you choose the right instrument for yourself? I mean, you have to trial and error, but start with the majors. Start with things that everybody. So if you look at Forex, for example, obviously the euro dollar, pound dollar, dollar yen are going to be several pairs that are going to be more active and more commonly traded and so forth. So stay with those. What instruments are you suggesting to face less volatility in the? I'm not sure what that question is about. Well, if you ask it a different way, I can expand on that. Okay. So let me go into, let's see if there's anything else interesting just kind of sitting. So this is silver daily, crude daily, Nikkei daily, FTSE, S&P, NASDAQ, gold. I haven't looked at gold today yet. Bitcoin. All right, let's take a look at, well, all right, so let's look at the FTSE. Why? Because the FTSE is doing something different. FTSE's not breaking down to new lows, right? Well, that's interesting. So let's just take a look at it and see if anything becomes apparent. Okay, so the first thing I want to see is what is the significance, if any, of this high? I'll go back. I'm going to go to the weekly real quick. We can see the overall pattern, uptrend, new highs. Okay, now was the resistance found there for a reason, technically? I'm going to do an extended retracement of this decline. 100% retracement is up here. And I'm going to look for a greater than 100% retracement to identify some potential harmonic numbers. In other words, there's a relationship between this distance and where these levels are. And voila, look what happens. And I have to say, I'm still amazed by how this stuff works sometimes. It doesn't work all the time, but sometimes it's just crazy. All right, so we have resistance found at the 161.8% retracement of this decline. And it stopped almost exactly at that price. And did what? And triggered a reversal day, an outside reversal day, right where we might have anticipated it. And so that would have told us, right, I'm going to go back a little bit and then we'll come to the current, okay? Because this right here, so you have let's say you don't have to use the 161.8. That's not really the point. The point is that there's an identified price level. You can have other ways to identify price levels. But new highs, you don't have so many. Fibonacci is one of them because you can't look at history. So taking this so we have a nice rally, and you can see how we have an upward sloping consolidation as we were looking at in one of the previous instruments. I can't remember which one it was. I think maybe the pound dollar. And we have a bearish reversal pattern at that resistance level. We break down, it doesn't follow through, but what does it do? It retraces back up to test resistance and creates essentially almost the perfect short candle pattern because it's a narrow range and it's a doji, and the doji is in the lower half or the lower third of the range. And we know that downtrends go down, they pull back, up, down, down, pull back up, go down, pull back up, right? That's how they progress. We don't know if this is going to be a downtrend or what it's going to happen, but we do know this behavior is bearish. And guess what? Bearish. Guess what else? No support at the 20 moving average. And what happens then? Resistance, the 20 moving average, resistance at the 20 moving average. Is that bullish or bearish? In general, it's bearish, right? So now things are starting to stack up. Okay, but one thing that doesn't stack up is we have a daily reversal that triggered today. And that's why this was brought to my attention. And we have, so let's just further the analysis then, going through and, interesting. As you see, the close is below the line, the close is below the line. So now we have this line along with the 20 moving average. And I'm looking. So if you're wondering what I'm doing, I'm looking. I'm looking to see what else might give us additional insight. Okay, so based on Fibonacci analysis, the minimum retracement is down here at 8,500. I got some of my euro dollar alerts coming off on the pullbacks. Okay, so we hit resistance and we start to sell off and we're getting bearish signals. And our initial minimum target, based on my assessment, is 8,508, or just a little bit above that. Okay, because that's the minimum Fibonacci retracement. Now, what I'm also going to do then is I want to look at this retracement here, the shorter trend. Right here, the shorter the shorter uptrend, because I don't know that it's going to go down, right? Regardless of everything we just said, that doesn't mean it's going down. That just means that there's more evidence for a continuation of the bearish move. And you can see that on this swing, we've almost retraced a 61.8% retracement. So this is, you could kind of think of this as general. Well, I should say the maximum, because a lot of times you see the 78.6 in Forex as well. But this is a level of interest. And we have resistance being shown. So what would change this scenario? So there's two scenarios on here as I assess it. Either we're going to go up and for a bounce or maybe a continuation before a deeper pullback, or there's going to be a deeper pullback first. Do I know which is going to happen? No, I don't know which is going to happen. Am I trying to be right about which is going to happen? No. I'm trying to make money in the market. And that means I'm going to be wrong all the time. So I'm furthering the analysis by adding additional pieces to see if anything becomes clearer. So far, it does not. This line, I'm going to want to watch that line. I'm going to want to know what's going on. Now we go into the intraday. Okay. And certainly well, let's go back to the daily for a second. So we could say, all right, so this is a potential bullish reversal. It signaled a bullish reversal today, right? And there may be follow through, because that would be a failed breakdown if we rallied. Okay. And what did I say earlier? Failed breakdowns or failed patterns can many times lead to nice moves. This pattern, this candle here yesterday is a clear bullish pattern. And then we have a clear follow through today, or attempted follow through. Okay. So that's why I'm looking at the upside. All right. Now, then we go into the shorter time frame. Let's assume we're looking at the upside and we want something for the upside. Then the obvious would be a buy above the daily high. But the daily high is quite what, the day is quite wide. So that's opening yourself up to pullbacks and all this kind of thing. So I think for now, the FTSE, I just watch it based on what we've been saying and see what it does. See if there's something that becomes a little clearer about what might be happening next. Going into the NDX, the NASDAQ 100. Since we did the S&P, we should look at this as well. The weekly first. Just drawing some trend lines. I'm not looking at much lower support resistance and all that, because for our purposes at this point, it doesn't really matter. Resistance becomes potential support. And then we also have this zone here. So that means we have a zone, right? Because we don't know whether this interim swing low is going to be more important than that one, that high. And again, there is consistency relative to the 20 moving average, where it dropped below it, dropped below it, dropped below it, quickly recovered. The same thing could happen here. And so we have to keep that in mind. This is a key level. Why? Because it's a higher swing low. This is part of the uptrend structure. If this is violated, the uptrend structure is violated. Therefore, we get a more solid bearish signal. The initial bearish signal is here based on the weekly. Okay. I'm not saying just because it's bearish doesn't mean it's a short. Okay. Now we go to the daily. And looking at the daily, now we're more concerned with the near-term price action. I'm going to just throw some things in there just to help visually identify what's going on and how the market is behaving around certain levels. So one thing that's obvious right away is we have a failed bullish breakout. And what did I say? The failed breakouts can have sharp moves, and that's what we've seen so far. Came down through the 20, back tested it as resistance. Came down through the 50, did not back test it as resistance. That means it's due for a back test at some point. So is the trend line. And guess what? They're aligned today. Now we want to look at, is there support? Is there any reason to find support where it stopped? I think the other important thing to kind of take from this analysis is this is generally the more detailed analysis. A lot of times we're going to do this on the weekend on the higher time frames. Okay. So these moving averages have been busted before, not enough by themselves. And the short term, we are finding support in an area of previous resistance, support, roughly. I mean, nothing outstanding, but the key one is going to be the 78.6% retracement. It's close enough. 20,931, 20,899. Given the reaction, I'm going to take that as a successful test of the 78.6% retracement. There could be another test, all right? And notice also we've got 1, 2, 3 sharp, clear down days. All right, so taking that all into consideration, now we go to the hourly. We see similar behavior to what we see in the S&P, not a surprise. And we have a bullish reversal candle. And I think in this case, in this case, in the S&P, it ended the period above the prior period high, and NDX is doing the same. So this is bullish. The question is it an entry here? Okay, or how might a setup for an entry come to be? But before that, we'll put in some Fibonacci levels. So I'm going to take the full major swing. And now the question is, okay, what other swing do you look at, Bruce? Well, there's no right answer to that. I'm just going to take this one and just see what it gives me. This swing high, we could also do from this swing high. Also notice the back test of the 200 moving average right here. As the downtrend progresses, also the breakdown of the 50 here. Notice that the next day's high tested resistance at that 50 moving average. That was support, etc. Also, the 20 moving average is crossed below the 200. This is on a 1 hour chart. So for a 1 hour chart, I'm not going to worry too much about that if we're looking for a long. So I think the direction would be probably a better long than a short at this point, unless you're going to trade very short term intraday for the decline. And I'm going to do a 30-minute. So again, everybody has different risk profiles and different degrees of aggressiveness. I mean, somebody aggressive could trade this on a breakout of this bull hammer momentum ham. I'd prefer to have a pullback, and you see what happened on a similar pullback we saw in the S&P. It found support around the 20, and we had a breakout of this candle. And look at how it had a pickup of momentum. So it looks like there's a chance that this trend may continue to progress to the upside. Oops. As seen here, and I'll talk about this indicator in a second. So what I'm looking for here is I'm looking for symmetry between swings. And I'm using the Fibonacci extension tool to identify where the targets might be. Okay, I'm going to take out this lower target because I don't care as much about that. I'm going to identify my breakout reversal level right there. So again, we have breakout through resistance, pull back, tested as support. It is support. That is the progression of an uptrend. So we have to take it as we see it, and that's as it's telling us. Now everything changes on a drop below this low right here at 2105. I shouldn't say everything changes, but this bull trend right here potentially is violated at that point. So I have my Fibonacci levels as potential targets, and I have my symmetry in there, which I'll talk more about, and I have previous support becomes resistance. I'm just looking to see, are there any other horizontal levels I want to have in there to see if they line up. And again, I'm looking to the left. I'm not looking to the right when I draw the lines. Okay, so we have the 50 moving average right here. That's something I want to know about. We have confluence right here around 21,257. We have confluence up here around 21,385. And so the first target zone would be this 21,257, 258 area. And let me just draw this pattern in here. Okay, so in the market, you have relationships between swings. And many times those relationships commonly called the measure move, for example. Okay, a measure move is the distance in one swing could match or have a relationship harmonically with the distance traveled in a prior swing. And when there is symmetry between the swings, there is the potential for a key pivot level. In this case, resistance. And so at this price, 21,257, this C to D leg matches the price appreciation of the A to B leg. Since it's matching with the 50% level, I'm going to give it some attention. If it was just there by itself, I'd watch it and I'd see the price reaction, but I would have less reliability on it. Now, ideally, when there's confluence, there's 3 or more indicators. I think mostly what we've seen so far is 2. If it's all we got to take what we got. Okay. So the fact that support was found at the 20 tells me in the future in the future of this rise, I could use that as a support level to maybe buy off of, because the market clearly has recognized the 20 moving average, given my assessment. Okay. So then you might say, well, is this a short up here? Well, you'd have to do further analysis to determine whether that's a short, and it has to fit with your criteria, what you look for, and so forth. Okay. This is a bounce in a larger downtrend. That's important to recognize. So it's a counter trend rally. So this is the beauty of how things all line up. Okay. So look what happened here. Now we have further confirmation of that zone as potential significance, because this downtrend line, well, I should say that it depends on when price gets up there, but it's an area to watch also based on the downtrend line as well. Okay, so ideally the entry would have been down here. We could see at this point. Okay, and we can do something like let's go to a 15. On a 15-minute, on a 30-minute. Okay. All right. Anyway, I think that summarizes that. Now there are extended level targets that are up here. The 127.2% extension, meaning the CD leg is 127.2% of the rally in the AB leg. And then there's also the 161.8% extension up here, where the CD leg is 161.8% of the AB leg. Okay, so it shows mathematical harmonic relationships. And it's amazing how often, particularly in indices and Forex and commodities, more so I would say than stocks, you see this type of behavior. Okay, now the breakout through this level then is going to, sorry, let me go back to the 30-minute chart. Okay, so a breakout through this level, depending on where we are relative to the downtrend line, and the moving average. So this is a 30-minute chart. So again, it's going to depend on what chart time frame you're looking at. I'll go back to the 15. The 15 we already passed. So let me stay with the 30. So the 30 is falling, and it's going to get closer to our current price action. And there has not been a clear test of resistance at the line. This is an attempt right here. This is an attempt right here. So, and it's 1, 2, 3 down. So I think there's a pretty good chance we have a test of that line. We don't know where it's going to be, though, by the time price gets up near it. Okay. So that is what I would say about the NASDAQ at this time. And you can see that it's not like a clear bullish reversal and everybody's jumping in the market and propelling the index higher. So the momentum is minor, but that could pick up at some point. All right. Moving on to Bitcoin. Okay, so Bitcoin obviously broke down, and it just began a breakdown, right? So let's go to the monthly chart and see what that tells us. First of all, I want to say one other thing on here. So we have a double top here as well. Okay, 1, 2. That's how I would look at it. Either, again, though, it's consolidation, it's a reversal. So what do you call it is not really the important thing. All right. So you could see the bearish signal on the monthly, and this follows an outside month. So last month was outside the range of the prior month. And then let me just look at one thing on here. I want to look at something. Okay, so, and that creates this expanded triangle type pattern as well. Now, since the breakdown is following through below this line, it looks like that this is not going to be a bullish pattern. It's going to be a bearish pattern. Certainly it is so far. And again, I'm doing my basic analysis, finding some of the key levels, and seeing if it's telling us anything. So I'm going to use the swing from this low and the swing from this low. You could also use this one, but it's so close to that, it's not going to make any difference, enough difference. So you could see we went through the first 38.2% level, and we're now testing support at the 38.2% Fibonacci retracement of this full uptrend. But what happened? We broke, I'm sorry, I'm on the 3-day. Let me go to the weekly. Okay, the weekly. So we broke through the 20-week moving average. Is that bullish or bearish? Certainly it's bearish, right? It's a long-term moving average. And not only did it break through it, it's selling off, and it clearly recognizes that there's something happening, okay, because the market is selling off clearly, okay? Now, so a couple of things I would say about that. Number one, we could still find support around this line and then chop around in this zone up here. It's not clear yet what's going to happen with that, and we're still looking. But obviously, the clear potential support levels down here, the previous resistance becomes support at 73,836. The 50-week moving average is down here at 74,925. That's also something I want to be aware of. Once we break one moving average, the next level becomes a target. Now, this is going to vary depending on what levels you use and so forth, but as a general rule, you could just like one level of support is broken, the next level of support becomes a target. That doesn't mean it's going to be hit, okay? Just that it becomes a target. And this moving average was successfully tested here and very much so here. So it's a solid, significant, important moving average. okay, for Bitcoin on the weekly chart. Now we go to the daily chart. The daily chart, again, I'm watching for a possible bounce in here. If I see a bounce, do I want to go long or go short? Well, given what we've looked at so far, it seems like it would make more sense to go short because there's potential follow through on the bearish reversal off the top. Okay. And we're in the second day down. Remember, I said 3 days are frequently common, right? And another thing, notice that, I mean, okay. I mean, it's really amazing how often this happens. But so let's just go back and review the history. So we have support of the 20-day moving average, broke through it, tested it successfully as resistance. It becomes resistance. Come down, break below the 50 again, below the 50, below the 50, testing it as resistance. And then again here. And then we have a bearish reversal candlestick pattern. That is sign of a progression of a downtrend. Now, I realize it's easier when you go back to see it, but I'm saying it this way so that when it's happening, it makes it easier to identify it. I'm hoping I'm doing that anyway. So now we break through resistance, a support of the purple 20, resistance, resistance, resistance right before the resistance test, right before the sharp drop. Very common. You're going to see something like this. We saw it in gold, I think. If we get to that, we'll look at that as well. So since it's only 2 days down, that says to me maybe it could go more in the near term. So that's one scenario. The second scenario would be that, let me go to the 4-hour. We get a bounce, and if you want to trade the bounce, we have the potential to get up to here. We could say 93,947, roughly, right? Why? Because that was a breakdown. Support. Look at the moving average there as well. This is a 4-hour chart. Breakdown, and it accelerated. So clearly it recognized this line. Once support is broken, price has a tendency to go back and test it as resistance. We don't know how far back, though, how close it's going to test it as resistance. It could come up here and turn back down. We don't know. We're just looking at the various scenarios. I'm going to identify this swing low right here. I'm going to identify this swing low right here as also price levels that we want to pay attention to. We're going to put a Fibonacci in for this guy right here, the near-term upswing, and initially look to see, is there any confluence? And we do see confluence here. So what this tells me is that if I would go long on a, let's say there's a setup, there isn't now that I see anyway, not yet anyway, then I would be looking for a bounce up into this area of 91,062 rather than this level. That would be the other option because we have some confluence here between the indicators. And then also up here where the 61.8% at 94,291 is in the same zone as the uptrend line and the moving average, keeping in mind the moving average is going to move. Okay, so we have the potential, let's say, to get up to here, but certainly as a minimum, I would say just below this zone right here would be a target, but we have no setup. And so let's go now into the 1 hour just to double check that. It looks to me like, the bears remain in control and we are still in a clear downtrend. And I don't see any sign of that changing based on what we're looking at so far. Although we are in an area of potential support. And you can see, again, this idea of support becomes resistance. You can see that right here, that line was hit exactly. And then the last 3 bars, it's been resistance. So again, you have support becoming resistance. So that is bearish near term, unless something changes. Okay, that is Bitcoin. I think that, okay, so I'm on the daily now on Bitcoin. I don't think I looked at the daily. So the 200 moving average, and I would say, is the first key target on Bitcoin as it stands now at 81,618, which is where the moving average is. This is the first test of the 200 since it was reclaimed back here in October 14th. This is important because many times the first test following a breakout of a moving average, major moving average especially, is successful. Okay, so the assumption is I'm going to have an assumption that it will be a successful test of support. But the market likes to fool us, so it doesn't mean it's going to work. With the potential to come down here to 73,836. Now, somebody was asking more about fundamental issues and stuff. So this is an example of where I would be spending some time looking more at any fundamental developments that might have come along. Why? Because it's a change after a long time. So it's been going sideways at the top for quite a while. But at the same time, I'm going to wait for my levels to tell me what I might want to do. And just to reiterate and just further on that idea, you have to be careful of getting biased by news, which is really easy to do. Even if you know it's happening, it could still happen. So that's important to keep in mind as well, because if you go on CNBC, for example, they're always happy, pretty much. Why? Because who wants to watch unhappy people? They are in the entertainment news business. They're not in the trading, make money business. This is very important to realize. Okay. So one final, I think we're getting close to winding it up here. So anybody has any additional questions, please pump them in the chat. And I'm going to go to gold in the interim.
Yeah, please. If anyone does have any comments, any questions, do pop them in the chat. We are still monitoring the chat at all times. Sorry, Bruce, you can continue.
Okay, so we've had this nice trend in gold, and we may be topping out at least temporarily, heading into a retracement. Looks really likely. Just going to throw a few things on here real quick, and then get to the near term. Okay, so you see that support or resistance was found right at the 161.8% extension of this decline, as we saw earlier in that other instrument. No accident. When you start seeing things all line up like this and repeat themselves, that's telling you pay attention. So we have obvious support around the 20 potential support around the 20 moving average, which is 2008.81. That's the first zone we want to be paying attention to, of some significance, I should say. And then we'll do the Fibonacci level. Let's see what we get with that. So the overall trend, and let me just go back to the monthly real quick. The overall trend in gold is bullish, as you can see. And we had a cup with handle breakout and a continuation of that bull move here on this decisive monthly breakout here into new trend highs. And the trend has been progressing in a very bullish fashion. Recently, there was a rest, which is good for the trend, an inside month and a breakout of that inside month. Not only was it a breakout of the inside month, but it was a breakout into new record highs as well. Very bullish. That means gold is very bullish. So if we're looking for shorting on pullbacks, we have to keep that in mind. And so the better direction is probably going to be to the long side. But again, this depends on what your time frame is. Okay. But in the nearer term, I mean, we almost hit that 20 moving average today and tested it. So we'll have to see what happens up here. Maybe we consolidate a bit. I don't know. We'll look at the 1 hour chart. You could see the 1 hour chart has something a little clearer. We have a breakdown of this trend, a reversal of this trend. So based on the 1 hour chart, we'd be looking to short on bounces. You'd be looking for setups for short to take advantage of a likely continuation of the decline. And we'll throw in an interim Fibonacci here to help give us some potential price levels along with these previous swing lows here. And combined, those give us some potential targets. Okay, but no entry set up yet, but a test of resistance and then a bearish reversal setup on some time frame, depending on what time frame you use, I think it's pretty safe to have a continuation down to some of these lower price levels. All right. And that and again, you want to look, remember, these are areas of price. So you want to look at shorting below it actually hits it potentially, right? And I'm not suggesting you short it into a rally. I'm saying you watch it here and you look for a signal to tell you that it's going down again, or maybe going down again. Okay. All right. That is it for gold. And so we have some changes happening today, as we could see in gold, particularly. We didn't look at, and we could see in the indices. And just finally on crude oil, if anybody trades crude oil is potentially, well, it's testing, it's on its way to testing a support level within this zone right here. So I think it'll probably find support somewhere in here and then rally off that, but we'll have to look at it a little more closely as it progresses. Because the question is, would you short it here for a drop below these lows? No, I wouldn't do that, because the probability is this is going to be support again, and we're way into the downtrend already, right? So we're further to the end of the downtrend than the beginning of the downtrend, this downtrend right here. Okay. All right. All right. Anything else to look at here, Sam?
Bruce, I think you covered it all. That was some very detailed analysis, and I hope the viewers really took some of that in, especially how you analyze the market in such a structured. No, absolutely. I particularly like how you analyze the market in such a structured manner. You know, you really took the time to figure out each swing, each the market structure as a whole, before you even started coming up or formulating with ideas, and that's super important.
Well, there's a reason. There's a good reason for that, right? Because if you do it the opposite way, or you don't do it, you end up making worse decisions. You think the setup's better than it is, for example.
Absolutely.
Or you think it's a more important price level than it is. The important thing, we're in the business of taking risk. So it's, I could trade anything at any time. You could always find a trade. But is it this trade or is it this trade? So if I'm going to trade this trade, I just want to know that. That's all. Then I can adjust my risk management accordingly. Or maybe I say I don't do these risk trades for whatever reason, which is not recommended generally. You want to try to stay with the ones that line up better. And they are not happening every second. Right? They take a little bit of time. Now, it's also important to understand if you're trading a 5-minute time frame, the analysis I did, you want to do it on the hourly and the daily. Ideally, you want to go at least 2 higher time frames. You want to look at the 2 higher time frames above your primary time frame that you use for your trading decisions. So if I'm doing a 5-minute, I don't care so much about the weekly.
Absolutely. Totally agree. That was really, really good, Bruce. Sadly, we didn't get any more comments. I think the viewers, I think you explained it so well. People really understood that. And again, for the viewers out there, if you did miss any of Bruce's analysis, don't worry too much. Okay, this will be uploaded to YouTube once the stream ends, so you can watch it back on your own time. Really, go through any parts that you may have missed, take notes, and do all that good stuff. So do not worry. But that was absolutely fantastic, Bruce. Thank you so much for taking the time.
I hope everybody got something out of it. Thank you, guys.
No, absolutely. Thank you so much. We'll end the live stream there. I wish you, I guess, in the US. Are you in the US or Canada, was it?
Yeah, Canada right now.
Canada, yeah. Sorry. So yeah, you're still during the day.
Well, same.
So, no. So definitely have a good rest of the day. And we will be in touch. And for the viewers, thank you all for sticking by. Hit the like, hit the subscribe button, join us on Discord, and we'll be back with more live sessions. Thank you, everyone. Thank you, Bruce.
Thank you, Sam. Thank you, everybody.
Take care.